Hey, sorry about that. I forgot I put it on mute earlier. Um, I was on live this morning and we caught some trades and we were just tracking it. So thank you for letting me know in the comments that you can't hear me. I said it's 7:51. I think we'll go ahead and get started because I think TikTok is shadow banning me. As you can see, I just had to do another appeal. It seems like every time I get on here, I have to appeal something for some reason. But today we are going to talk about confluences, okay? You add in confluences with your zones before getting in a trade to help your probability with the trade, okay? If you remember, we were talking about trading, and trading is a probabilities game. So, yesterday we went over zones. Okay. Well, yesterday we went over zones. That video will be up on YouTube. Okay. And my zones here on this GJ chart are these purple areas, these black lines, and then trend lines are also vertical zones, but we'll talk about trend lines. I think we'll go over trend lines tomorrow. Okay. So a confluence is, let me get an exact definition. How about that? So, definition of confluence, it says the junction of two rivers, especially rivers of approximately equal width. That's interesting. An act or process of merging, a major confluence of the world's financial markets. Okay. So, we're not gonna use any one of those definitions. A confluence is, I guess I should have gathered the words. Um it's two, we'll say three or four. Three or more, three or more price action signals on your chart. Sorry about that. The live just said it disconnected. Okay, so a confluence is three or more price action signals on your chart that all add up in favor of your trade. Okay. So yesterday we talked about zones and we talked about waiting for price to come to your zone and then let you know which direction the trade is going to go in. Okay? So when you're looking for price to show you the direction that your trade is going to go in, you are looking for confluences, okay? So when we first started, we started on the candlestick trading Bible, because the candlestick trading Bible are major confluences, okay? The candlesticks are major confluences. So if you recall, these are our candlestick patterns. We have our bearish engulfing bar. We have our bullish engulfing bar, a morning star, an evening star, a hammer, which is a bullish pin bar, a shooting star, which is a bearish pin bar, a Harami pattern, which this is called a bullish inside bar. Okay. And don't get the bullish inside bar confused with the engulfing bar. The bullish inside bar, the bigger candle is on the left, and the engulfing candle is on the right, and the smaller candles on the left with the engulfing. Okay. We also have a bearish inside bar. We have tweezer bottoms and tweezer tops. Okay. So candlestick patterns are one confluence. All right. And then you have price coming to your zone. Okay. And then rejecting the zone. Rejection in a candlestick is another confluence. Okay. So if we look at this candlestick here, this is a pin bar candlestick. The price traded through the zone, did a nice bullish run, and then it came back to the zone and rejected the zone. Okay? So that is also another confluence. So in trading, you want to have as many confluences as possible before taking a trade. So I want to start here on GJ because I just took this trade yesterday, and I want to show you guys my confluences. Okay? So as you can see, I have my zones here. I missed this first entry here. This first entry happened last week. Okay? Price traded up very bullishly. It broke structure. A break of structure is another confluence. All right? We're not talking about that right now. All right? A break of structure is a confluence. So price traded through bullishly. It broke structure, and it came back to 50% of my fair value gap, which was another confluence. Okay? Now, we have a break of structure. We have price came back to 50% of our fair value gap. All right? And then we had a candlestick pattern. Let me see if I can hide this real quick. Here we go. All right, so here on our zone, we had a candlestick pattern. I don't know if any of you were here the other day, but this is a bearish candle. This is a doji. This is a bullish candle. This 3-candle sequence is called a morning star. So that was 3 confluences letting me know to get into this trade. Okay. And I can put my, what you call it back. All right. I got in off of the pin bar confluence. Okay. I didn't wait for the candlestick pattern to finish, but as a beginner, wait for the candlestick pattern to finish. I knew that this was rejection in my zone, and I was trading on the smaller time frames. But for you, after you have that morning star here, your entry will be right here at the top of that morning star candle. All right. And then stop loss at the bottom of this candle right here, the 3rd candle from the morning star. And this would have been a 2-to-1 trade for you. You take it to the zone, or you could have took it to the trend line. All right. So that was one confluence. We'll go over and look at another trade. We talked about zones yesterday. You'll have to go back to YouTube and watch the video on how to mark up the zones. All right, so now we can go over to we can do AU. We can go back to we can go to GU. All right. Last week I posted this sell trade. Okay. So I'm going to zoom in over here. All right. So price did an impulsive buy, right? Made a higher low, then pushed all the way up to this zone. Okay. Price came to the zone. Now, at this zone, I was looking for reaction. Okay. Price was either going to trade through the zone or it's going to reject the zone. Those are your only options when price comes to a zone. It's either going to continue or it's going to reverse. All right. So price came to my zone. Then it gave me another, this one is an evening star. Okay. We have our bullish candle. We have our doji. We have our bearish candle. Okay. Price impulsively closed. So one confluence was the evening star pattern. The second confluence was how the evening star pattern closed. If we zoom into this candle, okay, it's a 3 candle sequence. 1, 2, 3. If we look at this third candle, price started up here. If you know anything about how candles open and close, I also did a video about that. Okay. It started here. This candle opened here. I'm sorry, this candle closed here. Then the candle opened here. It pushed up. It came down. It closed here. This candle opened here. It pushed up some. It rejected the zone. And then sellers violently came in. Sellers took over the market because there's a tiny little wick on this candle. When you see a baby wick or no wick at all, that candle means displacement. Okay? That candle means that the market makers have entered the market. That candle means the bankers have put $100,000 on this sale and they're going to get their money. Okay? The bankers came in so impulsively that they left a gap in a market. All right. So that's 2 confluences at this zone. Now, price left without us. And then it gave us another opportunity. It left another fair value gap. Okay. So now we didn't catch our entry here at this fair value gap because, of course, we didn't have any we didn't have any confluence, especially in this hourly time frame. If we go down to a smaller time frame, I'm sure there was something to show us. But here on the hourly, we have 2 confluences. We don't have 3. So at this point, I'm going to mark up both my fair value gaps because I want to see price trade back in to either one of these fair value gaps to let me in this trade. All right. Now, it didn't pull back here, but it pulled back here. So remember, we have one confluence, price traded through the zone. It gave us an evening star. And then that evening star, that third candle, gave us displacement. And now the market has given us 2 fair value gaps to enter into, but we have to wait for price to trade back to this area. Okay? Price traded back to this area. And price gave us 2 more confluences. Okay. It left us with a bearish engulfing candle. And in order for the candle to be engulfing, it has to run the low and the high of the previous candle. So this is a bearish engulfing candle. So that was our third confluence. You could have entered this trade right here at the close and placed your stop loss here, here, above the candle that created the fair value gap that gave you your entry. Okay. And then it came back, retested it again, came back, retested it again, and left us with another evening star. Bullish candle, doji, bearish candle. And then the market melted. So this trade gave us 4 confluences. It gave us 4 confluences, and then it traded right down to the zone. All right, for a 3-to-1. Remember, we don't want to take a trade if it's less than a 2-to-1. Okay, 2-to-1, 1-to-2. You look right here on your tool position, and that tells you that it's a 3-to-1, 3.34. Basically, you just take the number that's in front, and then behind it you put a 1. Okay, so we got a 3-to-1. So that was another trade that gave us some confluences. Let's go. I'm gonna go to Euro Odd because I'm currently looking for a trade here. So I'm going to delete this chart, and then we're going to do a top-down analysis, and we're going to walk through the confluences that I currently have, and I'm going to let you guys know what I am looking for to take this trade, okay? All right. So we're on Euro Odd, and we're going to start on the monthly time frame. All right. So yesterday we talked about zones. There are 4 different ways to mark up your zones. Okay. There's fair value gaps and inversion fair value gaps. There's support and resistance. There's order blocks and reclaimed order blocks. And there's supply and demand. I mainly use fair value gaps when I'm marking up, but sometimes I will add support and resistance. Sometimes I will use supply and demand or order block. And yesterday we went into all of those, but order block, supply and demand, same thing. Okay. All right. So I'm going to start on my monthly time frame, and I'm going to start closest to price. And I just want to look on my chart and look for areas that the market has already rejected. Okay. So looking at this monthly time frame, I can easily see that the market rejected this area. And if I look to my left, these areas of rejection are relatively equal, although this one did come a bit higher, right? But if I was to put a line here, they both go through the line, okay? And current price is here on this red line. So now I just want to zoom out and look to my left to see what could have caused this rejection. All right, so as I'm looking to my left, I see that currently right here where price is, I have a fair value gap. So I'm going to mark this fair value gap up. Okay. And then I'm just going to come back over to current price. And then also, I like to trade, hey Bible Buzz, I like to trade something called CRT, which is candle range theory. And I look to see if last month's high or low has been ran. And in this case, last month's high has been ran. So I'm going to mark last month's high and I'm going to change that line to red. Okay. All right. And this is all that I see on my monthly. So now I'm going to come down to my weekly. And if we look at our weekly, we can see how last week and the week before last, price came up to this area and it rejected. It tried to push through it again. It tried to push through it again, rejected. Tried to push through it, rejected. This time, it did push through it, but it's not holding. We only have 2 days left in this weekly candle. Okay? It's not holding at all. So I'm still going to zoom out and I'm going to see, is there anything else relevant to me on this weekly? And I'm sorry, I'm going to go back to my monthly real quick because I forgot to do another thing. So I said I do CRT, and CRT is looking for a sweep of the high and the low. And then I mark up 50% of last month's candle. And that's my TP area. And that's going to be red also. Okay. Now I'm going to go back to the weekly. And as I stated, I would look to see if there's anything else that I could use here on this weekly. I don't see anything at the moment, so I'm going to come down to my daily chart. Okay. Now, on my daily chart, I see 2 points of rejection to where I can draw a trend line, because it looks like price is trying to forming an uptrend here, right? We got higher highs here because it broke this last structure point here. And now we have higher lows and then higher highs, higher lows, higher highs, higher lows, higher highs. I see a rejection point here and a rejection point here alongside my trend. So I'm going to draw a trend line. Okay. I see a fair value gap here on the daily. So I am going to mark up my fair value gap. Now I'm going to come down to my 4 hour. Now, when I am trading CRT, there is only 2 confluences. Well, 3 confluences. There's still 3 confluences that I'm looking for. The first confluence is called a run on liquidity. Okay. And a run on liquidity is basically when price runs that high or that low of that last month's or last week's candle. And remember, I marked my high with this red line, and price came outside of this red line. So it ran liquidity because it ran that last high. The second confluence I'm looking for is a break of structure. Okay. I don't have a break of structure here on my 4 hour because my break of structure would be this area. Your break of structure is the last area that took you to your last high or your last low. So this is my last higher low that took me to my last high. Okay. So this would be my 4 hour break of structure here. But you don't always have to have a break of structure on a higher time frame. You can find your break of structure on the hour, the 30-minute, or the 15-minute, okay? All right, so I want to come down on my 15-minute, and I want to find my structure points, and I want to see if I had a break of structure, okay? So if I zoom out, I can follow structure again. Structure as far as an uptrend is higher highs, higher lows, higher highs. Structure as far as a downtrend is lower highs, lower lows, lower highs, lower lows. Okay. So on my uptrend here on Euro I, I'm looking for my break of structure. Okay. So here we had higher high, higher low, higher high, higher low, higher high, higher low. I do not mark this as a higher high because it's not higher than this last high. Okay. So now technically this is my new higher low. Okay. Now I want to find an area that's higher than this last high still before I can say I have a higher high. I have equal highs here. Okay. So I have equal highs here. And now with me having equal highs, I can count this as a higher low. Okay. Now this is my new higher high. No, it's not a higher high that failed to create a new high. No, that is not correct. It can't be a higher high if it's not higher than the last high. It's not a lower high either because a lower high is down here. A lower high isn't up here. Okay? So, higher high, higher low. Higher high, higher low. Higher high, higher low. Okay? Price tried to make a higher high, but it did not break the last higher high. So now, higher low, and I cannot have another higher high until price is higher than the last high. Hence the term higher high. Okay? I have an equal high here because it is on this equal level as the last high. This one and this one are equal to each other. No, it's not a break of structure. All right. So I have equal highs, and now I have a new higher low from my equal high, which is here. Okay. Now this is my new higher low, which took me to my last higher high. Now, the area that takes you to your higher high or the area that takes you to your lower low is where you're looking for your break of structure. So this area is my break of structure. Price officially gave me a lower low because it's lower than my last higher low. Okay? High and low of what? Okay. Let's go to a different chart and mark structure real quick. All right. Let's do this. A buy trend and a sell trend. Okay? You have those two trends, and then you have consolidation. And consolidation is when price is moving sideways. Okay? So in a buy trend, price starts from your lower low. Okay? It breaks structure on your lower low and gives you a higher high. Then it pulls back and gives you a higher low, and then it breaks that last high and gives you a new high, which is a higher high, and then it pulls back, gives you a higher low. It breaks. Babe, Kaya, why are you barking like that? Can you see why she barking like that? Okay. Sorry about that. My dog is going crazy about something. All right, let's do this again. A buy trend. Okay, a buy trend is an uptrend. You have higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. Okay? A sell trend. You have lower lows, lower highs, lower lows, lower highs, lower lows. Okay? When you are looking for a break of structure, price has to break the last higher low, okay? Or it has to break the last lower high. All right? So in an uptrend, in order to have a break of structure, this is our uptrend. Price has to break this last lower high. Has to come back and retest it and reject it in order to start a new trend. Okay? This is a break of structure. In a downtrend, price has to come and break that last lower high, come back and retest it, and continue higher in order for the trend to change. Now, sometimes you can get faked out because price can pull all the way back to the last structure point and then continue higher, and because structure never broke. Okay? So sometimes you'll be in an uptrend, right? Price can pull all the way back down to your higher low and then come back and make a higher high. As long as it doesn't break and retest. And sometimes price will break it and then come and trade through and continue higher because it never came back, retested, and rejected to start that new trend. See, if you see the difference, when it broke, it retested, rejected, it gave us our new lower high. Okay? Here, it came back, tested this area, traded through it, swept liquidity, took people's stop losses, and then continued higher. Okay? And it can do the same on a sell. So I'm going to delete this and we'll go to the 1 hour and let's look at structure. All right. I'm going to start here because I see clean pushes up, push up, clean structure, whatever. Imagine losing. Everybody loses. Imagine being a loser though. How about that? How do you know how to day trade? I've brought mentors. I have several mentors. All right. Uptrend. And this is how you have a trend line also, right? Trend line. All right. Uptrend. This was our last structure. Price came, broke this structure right here, gave us a new high because it broke that last higher low. Pulled back. This is the full pullback, okay? Because this area came lower than this area. Sometimes, well, a lot of times, right? Price won't finish with the correction, and this is how people get faked out because the correction never finished, okay? So this is one whole move, okay? Delete that part real quick. So here, here to here, okay? To here, to here, to here. Now, this was our structure point, right? Price got on top of it, and it came back into this fair value gap here. Hit 50% of the fair value gap to the T, and then continue buying. Sometimes you're not going to get a full retest of the last structure point. But if you have a zone near your last structure point, that's considered a retest, okay? That's considered a break and a retest. Should you wait for a retest? Yes, definitely wait for a retest at the break of structure. All right. So let's see if we can find an area to where price can pull all the way back, right? And I see one right here, actually. So this is our last structure point. This is our pullback. Price pushed all the way up here, okay? Remember, this area here is our last lower high. Price pulled all the way back near our last lower high. And then continued to go higher and make a new higher high. All of this fluctuation within, this is called internal structure, okay? You see that? All of this within is called internal structure. And this is where people get tricked out of their trades, okay? To Bell 98, we was going over confluences on how to enter trades, and then I was talking about structure and people didn't know what structure was, and structure is a basic, okay? Only 1 hour time frame. Nope, you can do this on every time frame, okay? So this is my uptrend, all right? And remember when I said price can come all the way back, look at this right here. Ooh, can I draw this out? There we go. So technically, this area right here was our last structure point. Remember, we got that pullback here, and then it took us to our last higher high. It came back, tested our last structure point. Now, this is where you would see if price is a break of structure. As you can see, price broke structure, but it did not retest and reject. It broke structure and then tested this structure point twice and then continued higher. So technically, we never had a break of structure where price was telling you to sell, okay? But within minor structure here, we did have a break of structure. And so when somebody just said, can you only do this on the hourly? No, you can do this on the 15-minute, the 1 hour, everything. So that hourly structure up here is basically a minor break of structure, okay? So I can come down here on the minor time frame, which is 15-minute right now. And as you can see, price ran that last high. Oop. All right. And then we had here, oop, here, 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 consolidation, because price traded in this range, but you can still mark these little minor structure points. All of this is minor structure. But you can't, some of these you can't just, you can't trade. Okay, so break a structure. This was my last area that led me to my last high, even within all of this minor structure. This is where I'm looking for my break of structure. Look what price did. This is not a lower high yet because this was my last lower high. This is my new lower high. So this broke my last structure point, came back into this fair value gap, retested it, rejected, tested it again, and then gave me a lower low, a lower high, and then another lower low. Okay? Did y'all understand? This is a valid break of structure. All right? I can delete this. We can take this on the 4-hour. Now, hold on. Let me go back real quick. This is another thing that messes people up. They get a minor time frame, break a structure. This is a 15-minute. Okay? Anything below the hour is a minor time frame. Okay? 1 hour and higher is major structure. Okay? This is what messes people up. They'll see that break a structure on the 15-minute and they'll do this. You can do stop loss here above this candle that created that. And then they'll mark TP down here at this last low. First of all, this is 300 pips. It's unrealistic weekly range. Every now and then GU does do 400, 300 pips weekly, but 100 pip trade is great on GU. You can get that easy, right? So this is a minor time frame. If it's minor, then that means you're either doing a scalp or you're doing an intraday trade. You shouldn't be in that trade no longer than a day, maybe a day and a half. Just depends on if price is just playing around like it did right here. So this trade you could have entered over here with whatever confluences you had. I can use my measurement tool and I can start at the top and I can come over here to the bottom. Okay, this trade was freaking 5 days. But this trade was 5 days because it did all of this for freaking 3 days. So sometimes, like I said, you may be in it for a little bit longer, but it's an intraday trade. Okay? So it's one of those in and out trades, depending on how the market is moving. All right. The hour or higher, you can hold on to your trades a little bit longer. All right. So I'm going to delete this and I'm going to come to the 4-hour and we can mark up structure on the 4-hour. Now, what people do is they see stuff like this on the 4-hour and they mark it up as 4-hour structure. And really, again, this is minor structure just showing up on the higher time frames. When you come to the higher time frames, you want to pinpoint the major pullbacks and impulses. So here we have a impulse here, right? And then you see we have a hesitation here, and then price got higher. And then we had a hesitation here, and then price pulled all the way back to here. So technically, you pull it all the way up to its highest point and pull it back to its lowest point, because this is the full correction. It's a lower time frame move that you can catch on a lower time frame, but on a 4-hour structure, this is the full move. Okay? Same here. As you see, price came here, it pulled back some, did all this up in here, went higher than this, did all of this up in here, went higher than that area. Then we got another pullback. That was our real retracement. And then price pushed up. All right. And now technically, price is still buying until it breaks this 4-hour structure. Price can do this all the way down to this zone. And then buy. Okay? Or break through, retest, and continue lower. All right? Let's see. GJ on the daily. Okay? Let's look at this daily structure. We'll zoom all the way out. In order to get daily structure, you need to zoom out more. Okay? As you can see, clearly price is in an uptrend. Okay? Now, you cannot have a new higher high to go into an uptrend until you have a break of structure. So this is my last low on the chart. If I retrace this area, I want to find the area that took me to that last low. That's my last structure point. This is where I'm looking for my break of structure. Till price breaks this area, I don't have a new trend. Okay? Price finally broke it. All right. We got a little pullback here. Then price pushed up. Then we got another pullback back to the same area, which lets me know that this was still all one impulsive move. Okay. If we look here, all three of these are relatively equal. This is one move. This gave us a new high. That pulls back. This does not give us a new high. This area is not higher than that area. This is internal structure. I do not mark this as a higher low because I don't have a new higher high. Okay? So, all of this is still one move. And this is my new higher high. Now, I could mark this as my higher low, but as we see, this area is lower than this area. So this is just internal structure. So I'm going to mark this. I'm going to take this to the area that broke my low. And as you can see, this area is shorter than this area. So it's this and then this. All of this is one move. Okay? And here, 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 here. Because all of that was one move. Pull back. Pull back. All right? So technically, we are still in an uptrend on GJ until price breaks this area. And now we're just dealing with internal structure. Okay. So although I can draw a trend line over here, and I do see a trend here, remember it's internal structure. Okay. So hopefully that made structure clear and our breaker structure is clear. Okay. I'm going to go back to GJ. Well, I am on GJ. Was it GJ? No, it was Euro odd because I'm looking for a trade currently on Euro odd. I'm going to delete my chart and then we're going to start our top down analysis over. Okay. All right. So when I come to my monthly chart, I am looking for points of rejection, okay, in order to mark up my zones. And I'm looking for points of rejection closest to price. And I know where price is because price is at this red dotted line right here. All right. So price is here. My last rejection point was here. The one before that was here. The one before that was here. Okay. And I didn't draw this before, but I can draw a trend line. You need 2 points of rejection to draw a valid trend line. So I am going to draw this trend line. I like to use my magnet tool just so that I can get it as precise as need be. Okay, I use my trend line tool, my magnet tool, and you just place it over it and price just grasp the area. And then I double click and I do extend right line just to draw it out into the future. All right, now I want to zoom in a little bit and I want to see what caused the rejection here and the rejection here. Because if I was to draw a line across the top of this candle, I can see that both of these areas closed underneath the same, or both of these candlesticks closed underneath the same area. So if I just scroll over here to my left, in this area, I also see another rejection on this zone, and I see a fair value gap right here. I use fair value gaps as my zones. So I am going to mark this area up right here from wick to wick. All right. And this line is like almost dead on perfect. I like to put my line on the blue line, which is 50% of the rectangle. Okay. Because price tends to come back to 50% of our fair value gaps. Now I'm going to turn this line from red to black because I like to keep my zones black, and then I use red lines for my CRT zones. Okay, so now I'm zooming in to current price. This is this month's candle. This is last month's candle. I see that price ran last month's high, and running last month's high is one of my confluences for my CRT play. So I'm going to mark last month's high, but I am going to change this line to red, okay? And then I'm going to take my rectangle tool and I'm going to draw from the top of my candle to the bottom of my candle, and I'm going to mark off 50% of last month's candle because TP for a CRT play, CRT stands for candle range theory. If you want to learn about that, I have videos on my YouTube. 50 TP for the CRT play is 50% of our candlestick. Okay. So I'm going to mark that up and then I'm going to delete that rectangle. Now I'm going to come down to my weekly time frame. And I see that I have rejection here and rejection here. So I'm going to mark this trend line. I don't see any other relevant fair value gaps, and I'm looking within these two lines here, okay, and possibly a little bit above, because if price buys, I do want to find a zone for price to go to if it decides to buy. Yep, CRT Romeo. All right. Now, I'm going to refresh and come to my chart. I'm going to tighten up my trend line because I don't like it when there's wicks like underneath it unless it just can't help it, right? So I'm going to tighten up my trend line. All right. And currently on my daily, it's showing me that price is buying. My trend is a buy. Okay. This was my last structure point that led me to this last low. Price pulled here, pulled back, higher high, higher low, higher high. This is technically a higher low, higher high. Okay. So it's telling me that prices want to buy. But price is currently in between two zones. So I'm not sure if it's going to buy or if it's going to sell. This red line is a zone and this black line is a zone. And then now that I zoomed in, I see that there's a fair value gap right here. So I want to mark up this fair value gap. Okay. Now remember, if this is a buy trend, there are opportunities for shorts, which is a sell, on these pullbacks. Okay. With us just getting a new higher high, there is a possibility that we can get an equal low here and then price push back up. I'm going to come down to my 4-hour. And since I'm looking for a CRT play, one of my confluences with CRT is called a run on liquidity. A run on liquidity is basically when price runs a high or the low of the previous candle. Remember, I marked up the high of my previous monthly candle with this red line. So price came outside of this red line and then it came back into this red line. Now, since I am looking for a minor structure trade, it is okay for me to go down to minor structure and look for a break of structure, which is my second confluence, okay? I like to look for a break of structure. So I'm going to come down to my 15-minute time frame. I'm going to zoom in and I'm going to find my 15-minute structure points, okay? Right here, we had some consolidation within this area. As you can see, this was my last high. This gave me a higher low here. And remember, price has to come higher than this area or equal to this area. And it came equal, okay? Now, this was my last higher low that took me to my higher high, okay? So this is my structure point that I'm looking for a break of structure on. So first confluence, price ran liquidity or price came outside of the zone. Second confluence, price broke structure. Okay. Third confluence, you want price to come back and retest the break of structure or retest the zone. In my case, in this case, I have a fair value gap right here, right near the zone. I can see that price pulled back into it already. So I want to mark up this fair value gap. And I want to see that price come back to 50% of this fair value gap. No, price did not come back to 50% of this fair value gap. But now I can also check my other time frames to see if I have any other confluences, because remember, I have two. I have my break of structure, I have my run of liquidity. So I'm going to come back to my hour time frame, and now I see that I have an inversion fair value gap right here, and that's also another zone. So I'm going to just mark up this blue line here so I can get rid of this purple background. Mark up that one and this one. Okay. Now, although I would have loved for price to pull all the way back here for me to sell, it looks like it came to this inversion fair value gap. Okay. So price came back to this inversion fair value gap. And right here on this inversion fair value gap, right here, this blue line, 50%, price created an evening star candlestick pattern. That's my third confluence. This bullish candle, this doji candle, and this bearish candle on this blue line, which is 50% of my fair value gap. That's my third confluence. Price came back. This is my fourth confluence. It came back and touched this zone again. Not only did it touch it, it created a bearish engulfing candle. This red candle here engulfed this previous candle. In order for it to be an engulfing candle, it has to run the previous candle's high and low. Price ran the previous candle's high and low and gave me a bearish engulfing candle. That's my fourth. What is it, my fourth or my fifth confluence? I'm kind of lost. But at this point, we have 3 or more confluences, to enter this trade. Okay. Now, price is currently at another zone. This was a zone that we marked up on our higher time frame. So if you want just one more extra confluence, you can wait for price to get under here and then retest it, give you another price action signal, which is our candlestick patterns at the zone, to show you rejection. Okay. How did I identify that second fair value gap? It basically just comes with training your eyes. So I cleared everything off my chart. You see this gap right here? Once you start to see the gaps, you just start to see the gaps. Okay. And then also looking for points of rejection. For some reason, price isn't going higher on this area. It's rejecting here. So you want to look left to see what could be causing this rejection. And then if you look, if I put my chart back up, right, and I do this zone again, and I do it and I keep it purple and I extend it to the left. If you look over here on the left, we also got rejection within this area. Okay. So at some point you have to identify and pay attention to the candlesticks and what the candlesticks are telling you. Okay. When you get these nice impulsive moves, that's letting us know, okay, maybe price is ready to sell. But price came straight to a zone. This is why you don't also just jump in just because you have an impulsive candle. Okay. It came right to a zone. It rejected. Now it's kind of bouncing in between these two zones. Okay. DJ Zeffy. Oh, you said, did I learn CRT from Romeo? No, but I did have his course. I learned CRT from my last mentor in his group. Somebody brought us CRT and we all learned it together. DJ Zeffy, you asked me how did I identify that second fair value gap. I just answered your question. Hope you're paying attention. Okay. So we have 4 or 5 confluences. You can really get into this sell if y'all want a trade. I am going to wait for price to break this zone. It's 8:55. This hourly candle. We got 4 more minutes left until this hourly candle. As soon as price gets below this zone, if it closes bearishly like this one, then I'll be getting in and my stop loss will be here above this wick. Okay. All right. So this was another trade. where I pointed out 3 to 4 confluences. No, I don't have a Telegram, but there's a free Discord. The link is in my bio. Okay. Let's find another trade to point out some confluences. All right, let's mark up AJ because just looking at this chart, right, there was a buy trade just like there was on GJ. The beginning of the week, I called GJ, CJ, and UJ. All right, so we come to our monthly chart. We zoom back out. Our monthly chart is looking kind of like consolidation, right? Although we have, let's do it like this. Although we have internal structure, right? All of this is internal structure. Although we have internal structure, our monthly structure, price was just straight down. Gave us a lower high because it didn't go as high as that one. Then gave us a higher low because it didn't go as low as that one. Now it gave us a higher high. And now we're somewhere in between these two. Okay? It's just moving sideways. But if we zoom in and let's get closer to current price is here. And if I look beneath, I have a rejection point here. This is where price came from. It rejected from here and it pushed straight up. Then there's another rejection point here. And then I see my fair value gap. I'm going to mark this gap up beneath. Just trying to box in price, okay? Going to replace that box. I want to make sure y'all saw that because I forget y'all can't see my whole chart. So current price is here with this dotted line. This is where price came from. Push straight up. We had rejection here. We had rejection here. So I look and I'm looking for my zone, and this fair value gap created my zone. Okay. And then as you can see over here, all the way throughout, we got rejection. So I'm going to replace this box and just put a horizontal line there. Going to change that line to black. All right. Now, back to the CRT move where we look at our previous candle. And I see that price ran last month's high. But in order to get a CRT move, you want it to come outside and then come back into the zone. So here, I'm not looking for a CRT move. I'm looking for structure trade or impulse correction continuation, okay? Sell Euro AUD. All right. So now I want to zoom back in and I just want to see what else do I see that is going on, okay? I see that again, price hesitated in this area and we got an impulse, correction, continuation. And remember, price can come all the way back to its last structure point and continue higher, which is what it looks like it's doing. It came back to this last structure point and it left us with this pin bar candle, and now it's just trying to move higher. So I really don't see anything else that I can use. I do see rejection here. I see rejection all throughout here. So I am going to zoom over. I want to see if there's a zone over here. And I see a fair value gap here and here. And I also see, I was going to say an order. Well, yeah, this is a monthly candle. I see an order block here. So this time I'm going to opt to use the order block for my zone. Okay. And you can just check all of them. Because of my eyes and how long I've been doing this, I just knew to use the. I'm going to mark this up as a zone. And I'm going to delete this purple box. Now I'm going to come down to my weekly. Okay. Now here on my weekly, I can mark a trend line because I see 2 rejection points and it looks like it's starting to form a downtrend here. Okay. We have this, and then this. So I have 1 point of rejection, 2 point of rejection. All right. So price has gotten on top of this trend line, which is still letting me know that it's moving bullish. Okay. Now I'm going to come down to my daily. Well, I was going to come down to my daily because I need a zone up here that price is coming to. But then I just looked and I saw this area here. And remember, again, we got hesitation within these candlesticks. All right. And 2AT, you can see the rejection on the left. Okay. If price hesitated in that area once before, there's a chance that it'll hesitate again. Okay. A strengthened line has 3 rejections. Yeah, you'd want at least 2 or more, but we don't even have to worry about that because as you can see, we have several. Okay. All right. Now let's come down to our daily time frame. And now I want to measure my next zone. Okay. So I'm just going to go from this black line to this black line. I use my calendar tool. It's 346 pips. I am going to go back to my weekly. And now I want to measure a weekly candle. So I'm just going to take this one right here. I'm going to go from the high to the low of this weekly candle. When I measure this weekly candle, it tells me the average weekly pip range. So this one is telling me that on a weekly average, I can get 222 pips out of AJ. Now, I measured this one. This one is telling me that I can get 361 pips. This range here is 348 pips. It's up to you, and it's also up to the market on how the market is moving that week. Because as you can see, price consolidated, and we only got 200 pips that week. And then the following 2 weeks, price impulsively moved, and we got more pips those weeks. So if you're just looking for 100 pips, you can come down to a smaller time frame and find another zone and break this area up. Okay, but within this point, I see another fair value gap. So I can break it up here on my weekly. All right. And as you can see, we had a little hesitation, rejection, all of that through here. So we'll just take this area, and this should have like halved the zone. Because what we're looking for with our zones, we're looking for our TP to hit and price to be able to take us out. We don't want to guess about price getting to an area. We want to get in the trade, and price is either going to hit stop loss or TP. Like, that's it. You only have 2 choices. And stop loss is inevitable, guys. You're going to have stop losses. It's okay. What you need to do is manage your risk. Okay? 2-to-1 trades and no over leveraging. All right. Now we're going to come to our daily. We're going to zoom out. We're going to continue to see what's going on. Okay. So we know at first price came from this area, gave us our impulsive move, gave us a little correction. We got all this little rejection here in this area. I look over to the left. I got rejection over in this area. I can kind of tone down this zone because I see this fair value gap right here. All right. And I have 1, 2, 3, 4 points of rejection. I can draw this trend line here. Okay. And then I just continue to do the same thing on every time frame just to get closer and closer to price. Okay. Now, let's focus on this buy right here and the confluences that we have for this buy. Okay. Confluence number 1. Price broke our trend line. Okay. It got on top of our trend line. This trend line was a sell trend line. Every time price came to this trend line, price sold. Price came back to this trend line, it sold. Came back to this trend line, it sold. Came back to this trend line, it sold. Price broke a little bit above, it didn't hold, it sold. Came back to the trend line, sold. So the story on this trend line is when price comes to this trend line, it sells. Well, this time it didn't. This time, price broke the trend line. That was one confluence. Second confluence, price broke the trend line, retested our zone. It retested our zone once. Okay. First confluence broke the trend line. Second confluence retested our zone once, left us with a morning star. Third confluence retested again, left us with a pin bar. At this point, we're in the trade. That was our third confluence. We get in at the top of that pin bar. Stop loss at our last rejection point here near the zone. TP at our next zone. TP hit. Okay. Price sold from the trend line. On this 4 hour, we don't have any other confluences to take this. On a lower time frame, I'm sure there were some confluences, okay? Price sold, we missed it because there was only one confluence or two. Price came to the trend line and then price rejected from the trend line, but we don't have anything else. Now we get back to our zone again, okay? We're back at our zone. Price comes into this fair value gap here. All right. Rejects the fair value gap. That's one confluence. Comes back, retests the zone, leaves us with a morning star. Okay. That's two confluences. Now, price left us a fair value gap here. If I can unextend. Price left us with a fair value gap here. Normally, you want to see price come back to the fair value gap, reject. It didn't do that, but it did come back to this zone again and left us a pin bar. That was our third confluence. You get in at the top of that. Stop loss at this last low here. TP at the zone again. Take that same trade. Took a while this time, but it hit. All right. Now, let's say you missed it at the zone. This trade gave several confluences. Okay. Again, came back to this same fair value gap. All right. And rejected our trend line and left us with another morning star. That was 3 more confluences. You get in here at the top of that, stop loss at the low of that, TP here, TP at the top. Now this one you wouldn't have took though because it's a 1.89, but as you can see, you're still in it, and the TP should be up here now, and this is a 3-to-1. Okay. All right. Any more questions about confluences and entering trades? Bible Buzz Daily, are you still holding GBP NZD? I'm going to come to GBP NZD because we brought earlier, but it looks like price definitely don't want to hold, especially when you see a candle like this. Exit your trade. So we were up. It was up 67 pips, and I didn't keep none of that because I did not move my stop loss into profit. So sometimes, guys, sometimes when you're not exactly sure on the direction, although this gave me all of my confluences, you can save yourself by trailing your stop loss, okay? You got in profit, good. I'm glad you got out in profit. I'm late. What strategy is this? I use structure and I use CRT sometimes. Okay, so I'm glad you got out in profit. Are you still holding GU though, or did you get out of that? Get out of that in profit? Let's see. All right, so as you can see, Euro odd is making its way down. I don't think I gave y'all TP. Let's find TP for y'all. If you go to the 4-hour time frame, go to the left on your chart, and TP is here. 50% of that gap. All right, that should be more than enough pips. Yeah, it's 140 pips. It's TP for Euro odd. So I think that's probably it, guys. That's all I can really say about confluences, right? So confluences again, 3 or more. You need 3 or more before you get in a trade. You don't want to enter a trade until it comes to your zone. So you're looking for these confluences at your zones, okay? We're not just looking for these confluences because you can have, as you can see, price really isn't at a zone here, but we got a morning star. This is kind of in the middle of a zone, right? It came back to a zone. It did turn around because it was going to buy, right? But this wasn't a major buy or sell area, okay? Uh here, okay. This is, let's delete this. This is consolidation. See that? Where price doesn't make new highs or new lows. So when you're in an area of consolidation and you have a zone, wait for price to break out of the area of consolidation. And as you can see here, price broke out of this area of consolidation. Okay? So when you have consolidation, you just mark your high in that consolidation area, and you mark your lowest low in that consolidation area. Okay, and you see I have it marked. Price finally broke out of the area, came back into it. This was kind of like our break and retest. Sometimes it breaks, retests right on top, and then continues. Sometimes it breaks, comes a little bit in, and then continues. What you want to wait on is that continuation, okay? Because you don't want to get faked out by the breakout, okay? Because sometimes price can come outside and then come back down, okay? So you see here, price broke out, came back in it a little bit, and then it broke out. Soon as price closed on top of that, get in, okay? But that's after the pullback, okay? Not just the first breakout, the second time. All right? And then technically price is back in this consolidation area, so we for sure know that we can get it to come down here to this low. Any more questions? Because if not, I think we are going to wrap it up. I appreciate y'all for the likes, and I appreciate you guys for being attentive. I do have a free Discord. The link is in the bio. I do have a Signals channel. First 30 days are free. The link is in the bio for that. I do one-on-ones. I'm here every day at 8 a.m. I trade live in the mornings. And then in the evenings, we come and have class and learn how to read the chart. All right. So yesterday we went over zones. The last month we went over candlestick patterns. We read the Candlestick Bible. All of the videos that we've done, they're on my YouTube channel. The link to my YouTube is in my bio. Tomorrow, I don't know what we're gonna go over yet, but we'll go over something. And then I'll be here tomorrow morning at 8 so we can make some money. Hopefully y'all got in your odd. Again, stop loss is here above this wick, and TP is, I want to say is here, but let me see about this trend line. Let's see. $227. Okay. Initially, I gave y'all a stop loss. I mean, a TP up in here, but we're gonna change it. Let's change that. I want to make sure TP hits. Where's my doggone line? Here it is. Okay. Here on your 4-hour. All right. Find this last higher low here and put TP here at the body. Let me zoom in. The body, the bottom of the body of this candle, okay? So right here. Oh wait, this was a CRT move though. So we could possibly get more pips. It's just making sure it breaks out of that area. I'm gonna say this: trail your stop loss. It's Tuesday, so this should be a part of the Tuesday expansion move. And with the Tuesday expansion move, you can hold the trade until Thursday. So I don't have any doubts that our TP should hit. So leave it here at this 4-hour for fair value gap here. Leave it here. I don't think I have no doubts of it not hitting. How to calculate the lot size whenever you want to enter a trade. 10 cents per $100 you have in your account. Okay? So only do 0.01 if you have $100 in your account. No more than 3 trades, which is 30 cents open at a time with that 10 cents, okay? Also, I say no more than 30 cents at a time. All of those trades, right, if they're 10 cents, shouldn't be no more than 60 pips. So 10 cents times 60 is $6. If you lost 3 trades, you'd lose $18. Okay? It is risky, right? So you can just do one trade. It just depends on your lot size. I mean, it just depends on your stop loss size, really, with the trades. But I say no more than 10 cents per $100, okay? What about SPY? Get on in the morning, we'll do SPX. SPX is a New York session pair, okay? And it moves best in NY. I don't think we're probably going to get any movement tonight. All right. So come and join us tomorrow at 8 a.m. Central Standard Time. Is right before market open. All right. All right, guys. Great. Okay. See you in the morning. Iona and everybody else. I'll see you tomorrow at 8 a.m. Central Standard Time if you can get on. Sneak on if you have to go to work. Euro what, DJ? Euro what? Are you talking about the pair? Euro odd, AUD. If you can't sneak on while you're at work, see you tomorrow, either 6, 7, or 8 p.m. Central Standard Time. Can't give you an exact time at all. But if you click my name while we're here on the live, the notification bell is there, and you can turn the notification bell on, and then TikTok will notify you when I'm on. But I will be on, okay, between those 3 times. You learn, but you keep losing. That means you need to stay in demo because you're still missing something. Okay? You're still missing something. Just go back and watch my videos, and hopefully something will click, and then keep showing up, okay? Keep showing up until you can put all the puzzles together, all the pieces of the puzzle, because trading is definitely a puzzle thing. You got to put it all together. Alrighty. Just making sure we're good. All right, we're good, guys. Speak now or forever hold your peace. Alrighty. I'll see you guys tomorrow. Y'all have a good night. Sweet dreams. See you in the morning. This is what I'm talking about. Why TikTok? See if I appeal it again.